Will now be recorded.
Okay. Yeah, now let me share my screen. So hope my screen is visible. So let's recall yesterday's class. So yesterday, based on the basics of accounting, what we have done is based on the golden rules, we have done the general entry postings. So now after general entry postings, we have identified what all the ledgers that need to be created in the books of accounts. After that, we have created the ledgers, and based on the ledgers, we have created the trial balance. So now after the trial balance, we'll be creating trading and profit and loss account. So for this also, we need the same T account. We'll be creating the T account. So now based on the trial balance, we'll be transferring all the incomes and expenses as per our golden rules of accounting. We'll call incomes and expenses as nominal accounts. So we'll be closing all the nominal accounts and we'll be transferring the balance in figure, which is a profit or loss, to the balance sheet. So now let's see from the starting what and all we can be used in the trading and profit and loss account, what and all the ledgers we can transfer. So the first one is purchases, correct? So purchases we can transfer into the trading and profit and loss account. So purchase account, what's the amount? 3,50,000. So the next one is, let's see, like in the trading and profit and loss account, first we will be doing the balance of the trading account. So for the trading account, we only take the incomes or expenses that is related to the creation of, like to manufacture the goods and raw materials. So in the business day-to-day activity, what are all the direct expenses and direct incomes to to manufacture the raw material? So purchases, this is a direct expense, and after that we'll be taking wages, correct? So wages is also a direct expense. So someone who is using your machine, so we have our mission account, so mission. So for the, like for mission, we should give the engineers who are working uh wages, correct? So wages are 50,000. So now after that, sales is your direct business activity, which is a direct income. How much is the sales? 1 lakh. After that, how much is your sales? It's 1 lakh. It's 4 lakhs. And what is your closing stock? So the closing stock as on the closing stock as on 31st 3 2026 is, suppose say 4 lakhs. Okay, so these and all will come under the adjustment entries. Now as on the date when you are preparing the books of accounts, like the final financial statements, you found out that the closing stock which you have has a value of 4 lakhs. Now, so now what we'll be doing is we'll be closing these accounts, because we only take, so the first we'll be creating creating the trading account. After that we'll be creating profit and loss account. So in the trading account we only take all the direct expenses which are involved to run the business. So to run the business, I need to do the purchasing, I need to do the sales, so I need to pay the wages for the employees. And now, so now which side we have highest balance? Obviously it's credit side. So it is 8 lakhs. So the same we will be taking in the debit side also. Now what is the balance in figure? So what is the balance brought forward?